guys, welcome back to the Independent Investor Channel. My name is Ryan. I'm coming to you from New York City, New York. This is an episode addressing the female investors. I've had the humbled opportunity to get introduced to a few young professionals, a few of my female audience that's been tuning into the channel. Honestly, when I started this channel quite some time ago, it really resonated with my male audience, and I was looking at the percentages and I was like, wow, am I just not saying something right, or what's the deal? And I really just kind of chalk it up to this. You know, there are two different people in this world. There's males and there's females, and we're both working really, really hard, you know, in whatever aspects of life we are. And I'm just not quite certain that there's a lot of time out there for a lot of people to just sit down and really pay attention to YouTube. Now, just here recently, I've come into contact with a few of my female students that are either looking to start investing, or they're reanalyzing where they are currently with their investment career, and kind of asking me some questions and wondering if they're doing the right thing. So I thought it prudent. I'm going to come out with this video really addressing my female audience, and I really hope this resonates you know, with my female audience that's looking to get started in investing. And you know, the single most important goal on this channel for me is not subscriber growth, okay? It's not. It's empowering one investor at a time. And when I say that, I mean it in its totality. Anybody who is seeking out investment information, how to get started in the stock market, can come to my channel, and they can really understand through how I employ some of my ideas, how they may take some of those ideas and employ those strategies. I really contend that a lot of the ideas that I offer on the Independent Investor channel are scalable, and they're very teachable. They're actually very easy concepts. I teach along a concept of being long and passive in the market, and I think a lot of people are really gravitating toward that method because it takes a little more hands-off. You know, as we're all working class people out there, and we just don't have times, if we're bringing up a family, we just don't have time to sit there and stare at stock charts all day. We just don't have that kind of time. And the solution to that is a lot easier than a lot of people think, and that's to enter into a passive investment approach to the market, guys. So when I talk about empowering one investor at a time, it's really interesting some of the dialogue that I've had with some of my female audience when they refer to the advice that they've got from their dad. And this really, it really struck me as interesting because it's happened multiple times when at some point, you know, everybody out there, every father, daughter, I have a daughter myself, and I will pass this information along to my daughter as well. And I think there's a fundamental truth to when, you know, the dad seeks out their daughter, you know, to give some life advice, you know, and we're speaking specifically about the financial piece. And given that advice to say, hey, listen, you're going to start your account and you're going to fund it in this manner. And over time, that's going to provide you some financial security. And I think the word security really is what any father-daughter or father is trying to do for their daughter, is to provide some of that independent security for their daughter, you know, in their late teens or in their 20s when they're looking to start a professional career. I'm going to do it with my daughter, no doubt about it. I'm going to sit her down when the time is right. I've already started those accounts for her, but there will come a time when that father-daughter relationship really takes hold, and we sit down and we have a serious financial discussion as to how we can set ourselves up to be independent in the future with regard to our finances. And I really thought it interesting. It's come up quite a few times on discussion with folks that are young professional women that have just maybe newly married, for example. Maybe it's a dual income family. But I found that a root or a commonality amongst those conversations was the father-daughter discussion at some point during that woman's young life, right before they entered into the real world, in that the father actually took a real proactive approach to helping that young female at least get that investment account started, and getting it started in the correct way. because I always ask, okay, well, what did you get started in? And it's amazing to me how credible that information from good old dad was at some point in that young person's career. All right? The second thing is status. What I mean by that is marital status, single, young, professional, stay-at-home mom. Those are certain things, obviously, that can play into what type of financial program you put into place, okay? If you have a spouse, right, there's a double responsibility there. There's a double benefit to it as well. In acknowledging how you guys are going to approach the investing or the financial situation, together. Now, if you're a single professional, it makes it a little bit easier. And all the rules that I speak on investing apply to you as well with regard to your monthly contribution cap from $0 to $458 a month, the potential for you to enter into a self-directed account, and not subject yourself to going in and sitting down with a financial planner, because I don't differentiate in the naiveness or the lack of education between both males and females in going in and sitting down with a potential financial planner, and them kind of taking advantage of that lack of education, basically, before they sit down and kind of being duped into going into a managed situation without really understanding the full impact of those decisions, okay? So there's some real benefit in the information for the single professionals. I dealt with one who is a colleague of mine at work, actually. She's a single professional as well, 32, who started her investment career in her early 20s. She's sitting on $50,000. She's still single, unmarried, professional, right? Taking a transfer, and those investment dollars will go with her. That just adds some level of financial security. There's a lot of difference, guys, between having nothing and having a nice $50,000 nest egg to kind of rest back on and look back on and reflect and say, right on, I made that right investing decision when I started my professional career as a single person, okay? The last thing I kind of want to talk about is really from my own personal repertoire, how I approach investing with my spouse. I've spoke with a lot of people who may carry a 401k account or a 403b account with their potential work. And those folks, whether it be the spouse, male or female, want to start an additional self-directed Roth account on top of that, all right? Now, even though I do encourage you guys to take full advantage of the suite of products out there, whether it be a 401k, 403b, your self-directed account as a single person, or two self-directed accounts as a married person, you need to take into consideration all people that are involved in the family, all right? And a rule that kind of helps me in my financial application of new funds, whether it be monthly contributions or the lump sum contribution that I make to both retirement accounts, is the 50-50 rule. The 50-50 rule is really simple, as it would imply that any new dollars that go into the account get split evenly between myself and my spouse. And this really, really is interesting. It allows for some empowerment within the relationship, certainly, but just from a making everything even perspective, it really makes it nice to split those accounts amongst different assets, I might add, different stocks within each respective Roth IRA account. And the performance is going to be different. But the initial contribution to those accounts, dollar for dollar, is actually 50-50. It's actually perfectly even. So, for example, if I had, $400 to invest per month, and I already had a retirement account, for example, at work, and I was looking to devote those to two retirement accounts in a married situation, the 50-50 rule would help in that I would take $200 and invest it in each one of those. Now, in some situations where one of the spouse actually has a 401k or 403b as well to supplement the financial status in the relationship, you might want to take that into consideration and be a little more overly aggressive on the other spouse's situation that doesn't quite have that additional support through the employer, okay? So this is kind of a rule that you can kind of employ to help match, you know, and make sure that everybody is actively engaging in the stock market in building up our retirement accounts together, guys. Listen, thank you so much for tuning in for my female investors portion of the Independent Investor channel. If you guys have not subscribed to the channel, hit the subscribe button. You'll be notified of future videos that I put on YouTube. Leave your comments at the bottom, guys. If you think that I've missed something in this particular address of my female investing community, please leave that in the bottom. I'm really starting to enjoy some of the dialogue that I'm having with some of my young, single, and married professionals. Some of the married couples that I've actually had a chance to help out. It makes it doubly difficult, but there's probably double the reward there to be had in a dual situation, guys. So thank you so much. If there's folks out there that you know that can benefit from the information, share that link with anybody out there that you know that can benefit from the information. If they're looking for stock market information, guys, and good luck in your investment future.